Alright guys, so we are back, and today I'm going to be showing you guys exactly step by step how I caught S&P 500 longs live on Discord, live on YouTube, and I gave the signal, and multiple people made money with me. So very happy for that. I don't like to be the only one that eats. I like other people eating at my table too. So I'm going to show you guys exactly step by step how it got done and how you guys can also do it. So let's get straight into it. Alright, so this is essentially what prices look like, and this is how it turned out. Okay, now what we have step by step, because I'm gonna show you guys how exactly how market looked during pre-market. So during pre-market, when I was making my watch list that I do every day that I give out, we saw a 4-hour small bullish fair value gap right here, which is where my mouse is at, and then on the hourly time frame, which I'll show you guys right now, we had 2 other bullish fair value gaps. Okay, now with that said, that was my area of interest. I just wanted price. I put it in the watch list. I just wanted price to retrace into that area, and then from there, when we see a volume spike plus price action confirmation on the 15-minute time frame, I would take longs as long as all the other conditions are there and everything's looking healthy. We're getting a good retracement. There's no choppiness, etc. So now market starts going right. Right now it's 5 a.m. Let's go to 8 a.m. Starts selling off. Right, and this is only like 9 a.m. so price is selling off, and this is a good sign. Why? Because that means that price, when market opens, doesn't have to sell off too much to get into the area that we're looking for to be able to get into longs. Meaning, if price opened right here and then we had to wait a couple candles for price to retrace all the way down here, most likely, rather than not, price is going to use all its volatility and volume for the early morning session to get down here. But when price is already getting down here before market is even open, which means before market has even used its volatility and high volume, then that's already a good sign. So that even gave me a higher confirmation to be waiting on those longs. So from there, we scaled down to the 15-minute because that's where I was trying to execute today. So I looked, or not today, when I took the trade, which was yesterday, but we started going the 15-minute time frame. Price started going right, boom, first candle open, taps into this 4-hour fair value gap, but as you guys can see, the 4-hour fair value gap was pretty weak, small, but price respected it, and that's what I like to see. Now, that wasn't my main area of focus. I did want price to tap in a little bit lower, and essentially the next candle, that's exactly what it did. So as you can see here on this candle, we disrespected this 4-hour candle, and then we tapped into the hourly, and then we ended as a gravestone doji with a spike in volume. Now, couple things to keep in mind, right? If price would have inversed this 4-hour fair value gap in the process of tapping into this hourly fair value gap, meaning that this candle closed below here but somehow ended bullish. I mean, it would have ended bearish because it opened here, but somehow, some way, it would have inversed this 4-hour fair value gap, and it would have still ended somewhat bullish but still tap into this. I wouldn't have taken it. Why? Because if price is disrespecting the 4-hour fair value gap, well, not disrespecting, inversing the 4-hour fair value gap, then that shows you that there's something else happening. Why? Because this next candle, which we're seeing the dragonfly doji, is also 2 things. It's 10 a.m. candle, which means the hourly candle finishes forming at 10 a.m. right, every hour, and then you also have the 4-hour candle that finishes forming at 10 a.m. as well on index. So on on ES and NASDAQ, it finishes forming at 10 a.m. While if you look at the stock version, which is SPY and QQ, it wouldn't be until 12. Okay, so with that said, right there and then, that gives me double confirmation because I look in the hourly and 4-hour and nothing got inversed, because you can clearly see price bought back up above the 4-hour fair value gap before candle closed. So from there, I got in straight up, just straight up got in. Okay, bang. Now here's where things are a little bit, now here's where you got to analyze the trade, right? You got to be very meticulous. You got to look at the details of what market has been giving you earlier in the morning, so you can know essentially what I'm looking for is what are obstacles for me to be able to hit my take profit for this trade. Meaning, what are things that can cause price to reverse and stop me out in this trade? Mark them out, and look to see how price reacts when it gets in those levels. So we start first by analyzing before I even show this off, right? We're taking long, so we want to look for things that are going to try to reverse and sell off the market. So let's start off. Something weak but still got to mark out is a 15-minute bearish fair value gap that we have right here. So I'll extend it a little bit. Okay, now let's go on the hourly. What did we have on the hourly? We had a bearish fair value gap that finished forming at 10 a.m. also. That's why you always got to look at the hourly candle and 4-hour candle when it finishes forming. So I look out and I see the bearish candle. So I'm okay, that could be a problem. The 15 minutes, a 15-minute fair value gap that just finished forming, I don't think of it too much of a problem, especially because we're so bullish. But an hourly could cause a lot of friction and could cause some type of reversal. So I definitely marked that one out, right? And now my end goal was to reach all-time highs, which was also pre-market high. So this is what we're looking at right now. And now we could see, we can erase this 4-hour fair value because it didn't get inversed. As you guys can clearly tell, it didn't get inversed. So we can delete it, right? Bang. And that leaves us with 2 obstacles to reach our take profit, which is also all-time highs, okay? Now, what do? I take long, as I said, because we had the spike in volume and we had price action confirmation. So essentially, as I told you guys, my take profit was all-time highs. And then we extend it to the side, whatever you guys want to do. And now this is where you have to keep paying attention to the market. This is why I'm not a firm believer in just set and forget, because set and forgetting means that you stop managing your trade and you're working. Like, this is me working. I don't just, when you're at work, you don't leave a machine running and just leave work. No, you got to stay, manage, make sure you're executing right. The only reason people say set and forget is so that you don't make dumb decisions. But if you want to be a professional trader, you have to be able to trust yourself in these type of environments and know you're not going to make a dumb decision. And what's a dumb decision? Moving your take profit somewhere else because you got greedy. Moving your stop loss somewhere because you don't want to lose money, right? Breaking your rules, in other words. Not me. I'm managing my trade to see if I'm seeing friction, I'm seeing price reverse, I'm going to want to take profit or get out. Okay? So, as I was saying, we have the 15-minute fair value gap, which is okay. Friction, but I think we could break above it, especially because the spike of volume is so nearby. I think we could break above it. 2, we have the hourly bearish fair value gap, which there is where I'm a little worried what price gets up there. So what did I do to manage my trade? I took profits, which I gave the signal for all this. It's on my Discord. If you guys want to know Discord, just contact me, DM me. I'll send you guys the link. And if it's on my Instagram, you guys can look in the bio. You guys can join it. TikTok, whatever you guys want to do. So we have this, and then we have this. Now we wait for price to start going. Okay. Boom. Bang. Okay. So by 10:30 in the morning, we already invalidated the 15-minute fair value gap. So I'm okay with it. Now let's erase it. Why? Because I'm not worried about it. We already broke above it. I'm sure that on the 5-minute we inversed it. Yeah, we did. You see? So I'm not worried about it anymore. So I erase it. Okay. Now that leaves us with what I just said. I'm going to take my profit, my first take profit, exactly where I'm telling you guys because of what I just said. Okay? So let's make it blue. First take profit is in the blue. Why? Well, since it's an hourly bearish fair value gap, which means it holds more strength, price here could reverse. Okay? So why would I set it? Why am I setting it specifically at the entrance of the fair value gap? Well, because if there's going to be a reversal, right? If somehow the price is going to reverse, it's not going to be at the end of the fair value gap. It could be either in the beginning, the middle, and if it's going to reverse, it probably won't get to the end, right? So you want to set it in the beginning, because if price, there's a lot of times that price just taps into the fair value gap and just sells off, right? You don't want to be the one who's greedy, so you put your take profit above the fair value gap. Above the fair value gap as a take profit, but you're not setting it correctly, because by then, if price is going to reject, it's going to reject already. So it wouldn't hit your take profit. Now you just got stopped out and made no money. So essentially, as I was saying, how do we delete this puppy? I set my first take profit there, waited patiently. I had faith we were going to tap into it. I just didn't know if we were going to be able to just bang. Okay. So what we're doing now is we're waiting Okay. Okay. Bang. First take profit is hit. But what does this tell me in the first take profit? First take profit we hit. We have a spiking volume compared to the last one, which was also bullish. And we got almost all the way to the end. Which means to me that the hourly bearish value gap didn't have that much strength. It didn't have that much strength because if it did have a lot of strength, whether it was going to reverse or not, it would have had an immediate effect at least halfway through or in the beginning. So that's a good sign for me in this trade. So boom, first take profit gets hit. So now I have more confidence. I tell everybody I'm gonna definitely wait it out. So what do? We start waiting more, and essentially bang, spike in volume with a strong hammer. Now I know I'm in the green. Now it's just waiting patiently. But this is what I mean why you don't want to set and forget, because once my take profit one got tapped into, I moved my stop loss, which is down here. I moved it to break even. So now I made money and I cannot lose money. Okay, that's how you manage a trade. Now, what I also did was after on this at 11:45 a.m. after price inverse the hourly fair value gap, which holds a strong bullish confirmation for me, and it had strong volume and price action confirmation, and we flew through the hourly fair value gap. I felt that there was no more friction that could reverse price. So what did I do? I set my take profit in my stop loss, excuse me. Damn it. I set my stop loss into take profits, and I went on the 5, and I put my stop loss right here. Let's make it red so we're able to identify. Why aren't you red? Don't make me crash out. Oh, it's this. Okay, cool. Anywho, that's where I put my take profit, my stop loss. Dude, in fact, I keep mixing it up. You see, people make mistakes to this day. Anywho, stop loss here. Stop loss here. Take profit here. Now my second take profit is over here. Now look, let's stop for a second. Let's freeze and let's see how we've managed this trade so far, which is what I look at after I take the trade. I go, okay, so what have I done so far? How have I managed this trade? And I review all this. You have to journal all this, right? So you say, okay, not only did I take every type of risk I could have off, now for sure, every contract I have is going to make money. Why? Because let's say for some reason price here reverses, it's going to stop me out in profits. So any contract I have left would make money. Instead of when it was at break even, then some contracts would just not make money or lose money, and that still would be okay. But now I'm securing more and more profits because price has gone higher and it's taken all the, I guess you could say, areas of friction that could cause the market to reverse on me. So from there, we start going up, and then we could say price consolidates a little bit, and then boom. Okay. Now, some things I'm probably going to hear for some of you guys is going to be, well, Kev, if price kept shooting up, why didn't you milk your profits? Well, price did go shooting up, right? The reason I couldn't milk profits, or I didn't milk profits, is because one, we're at all-time highs, so any type of take profit I put is all going to be psychological, just putting random numbers. Like let's say if I were to do it, it would be, the next number would be at 74.60, right? And then 74.70, stuff like that. And that's not how I trade. I like putting my take profits and stop loss on actual areas of liquidity, not just a guessing game, because now you're practically guessing where price is going to reverse. That's not how you trade. So I got all out here, watch price go up a little higher. Good for it. I'm proud to say that we rode it to all-time highs, and from there, that's it. Call it a day. Essentially made a 1 to 2.81 risk to reward. For every dollar I risked, I made $2.81, and that's what we made, a little over $1,400.